Hey there, finance enthusiasts. Today, we're diving into a fascinating report from Deutsche Bank, which has just announced some impressive numbers for the second quarter of 2026. Now, I want to take you behind the scenes and break down what these figures really mean and why they matter. So, let's start with the headline. Deutsche Bank has reported a record post-tax profit of €1.9 billion for Q2 2026, a 10% increase from the previous year. That's a significant jump, and it's not just a one-off. The bank's first-half performance has also been exceptional, with a record after-tax profit of €4.1 billion. But what's driving this growth? Well, personally, I think it's a combination of smart strategies and a well-diversified business model. Deutsche Bank has been scaling its global Hausbank concept, which is essentially a one-stop shop for clients' financial needs. By focusing on asset gathering and capital-light investment banking, they've seen strong growth in client assets and revenues across their private bank and asset management divisions. One thing that immediately stands out to me is the bank's disciplined approach to costs. Despite investing in strategic areas like wealth management and technology, they've managed to keep non-interest expenses in check. Operating efficiencies of €0.3 billion year-to-date show that they're not just throwing money at problems but finding smart ways to improve their processes. Now, let's talk about the bank's performance across its different business segments. The private bank has sustained revenue growth, with an 11% increase in client assets. Asset management is also thriving, with record net inflows of €25 billion in Q2. The corporate bank is seeing strong loan and deposit growth, while the investment bank is killing it with record FIC revenues and a 36% growth in IBCM. What makes this really interesting is the bank's ability to maintain a strong return on tangible equity across these segments. For example, the private bank's ROTE is 11.3%, and the corporate bank's is an impressive 16.4%. These numbers show that Deutsche Bank is not just growing for the sake of growth but doing so profitably. In my opinion, the bank's focus on sustainable finance is also a key factor in its success. With sustainable and transition finance volumes reaching €31 billion in Q2, it's clear that Deutsche Bank is not only adapting to changing market trends but also leading the way. Looking ahead, the bank remains confident about its 2028 targets, and with the rapid evolution of AI, they see even more opportunities to deliver value to clients and make cost savings. So, there you have it, folks. Deutsche Bank's Q2 report is a testament to its strong performance and strategic vision. It's a great example of how a well-executed plan, combined with a diversified business model, can lead to impressive results. I hope this breakdown has given you some insight into the world of finance and Deutsche Bank's journey. Until next time, keep exploring and learning.